Hi guys, my name is Beth. Welcome back to Forex technical analysis for swing trading. Okay, so let's continue. And as you guys know, I always start with the USD index chart. And here we have USD index chart consistently behaving below the blue moving average line. But unfortunately the size of this down breakthrough is not big enough to be considered breakdown, so it is still considered the up fake out. You see, all this breakthrough is less than 40% of this down supposed the leg, which is not enough breakthrough. So at this point it is still considered the fake out. We have the up leg, market is faking out. Soon the market should return into original uptrend. So at this point it is still considered uptrend. So let's write it down. USD index is doing the up fake out, and we're gonna look for opportunities to buy USD. Okay, now let's analyze each individual forex pair. So here we have USD Japan yen down, retracement down, and market seems to be retracing. So at this point we have consistent down candles behaving below the blue moving average line. The size of this breakthrough is so much, as you guys can see here, almost like 70 to 80%, which is clear breakthrough. So here the trend is clearly down, meaning that USD is getting stronger against Japan yen, right? So let's write it down. USD Japan yen trend is down, which conflicts with the story of the USD index. In the USD index chart, we are reading that USD is getting stronger. In the USD Japan yen chart, we have USD is getting weaker against Japan yen. So we have the conflicting stories, and when we have conflicts, we will wait until market clears out. So at this point it's conflicts, and we're gonna do nothing with USD Japan yen. Okay, USD Canada dollar, the loonie, and here we have original down leg, market retraced. So when the market retraced about 50%, we bought risking 0.7% of my account, right? So after that market went up, retrace it one more time, then market seems to be going up, and it should soon reach the take profit up there. So and currently and we have the up leg like this. We have the up leg going up like this. Size is very nice, consistently hanging out above the blue moving average line. Trend is definitely up. If the market retraces above the 50% here, then I would recommend you guys to buy USD Canada dollar. So at this point it should soon reach the take profit up there. So let's write it down. So USD Canada dollar trend is up, leg size is nice, and our decision is to keep existing 0.7%. Okay, USD Schweizer franc. So we have the nice down leg like this. The size of this breakthrough is about the 50% here, which is ideal, and we have more than 10 candles hanging below the blue moving average line, and breakthrough is at least the 50%, so which is a clear trend reversal. So at this point USD Schweizer franc considered to have a downtrend, and USD is getting weaker against Schweizer franc. So let's write it down. USD Schweizer franc trend is down, meaning that USD is getting weaker, right? Which conflicts with the story of USD index chart. In the USD index overall, USD is getting stronger. and USD shifter has the conflicting story with the USD index chart, so that we will do nothing. When we are absolutely certain about the trend of the USD index chart and individual forex pairs, then we will trade with confidence. Until that, when we have conflicting stories, and we will wait until market clears out. Okay, pound USD. So here, so we have original downtrend going up like this, and the breakthrough happened around this point, and we have market consistently behaving above the blue moving average line, but unfortunately it's not enough for the market to have downtrend, because the breakthrough of this supposed up leg is just about the 40%, right? We need at least the 50% of the leg, wave leg on the other side of the moving average to be considered trend reversal. So it is, at this point, it is still considered the downtrend, and currently market is doing the fake out. Soon it should return into original trend like this. So if you have the bullets to risk, I would recommend sell in pound USD right now. So you can put your stop loss around this zone, and you can put your take profit just below the local minimum here. It should be really nice risk and reward ratio 1-to-1 trade. So currently market is doing a fake out around the 50%, and which is a really good zone to trade. Okay, so let's write it down. Pound USD down, fake out, would sell at 50% retracement. Yeah. For 1-on-1, risk and reward ratio 1-to-1. Okay, Euro USD. So here we have again the down leg. The size of this down leg is very big. Now the market retraced, almost reaching the 50%. Market is doing the clearly fake out. Now it should soon return into original trend. So if you have a bullet to risk, I would recommend selling Euro USD, because market is doing the fake out, and it is a 40% retracement zone, and set your stop loss around the 80% retracement up there around this zone, and put your take profit at the local minimum here for 1-on-1 for the risk and reward ratio 1-to-1. Euro USD down fake up too big, would sell at 0.8 for 1-to-1, risk and reward ratio 1-to-1. Okay, Aussie. Okay, Aussie, down leg retracement, down leg. Now market retraced into 50%. Now it seems to be returning into original trend. So if you have been following the Aussie, when the market reached the 50% candle here, it would be really good zone. It would have been a really good zone to trade. but market reached the 50%. Now it seems to be returning into original trend, and it should go down even more. Somehow market still retraces back again into 50% or 60%. Here it would be a really good zone to sell again. So for me right now, I don't have any additional position to risk, so I can't trade anymore. So I would recommend that watch Aussie closely, and if it retraces back into 50 to 60% around here, and I would recommend you to sell Aussie. If that is the case, put your stop loss above the local maximum here and set your take profit at the Fibonacci extension 1.618 down here, and it would be a really nice risk and reward ratio 1-to-3 trade. So I would definitely be watching Aussie closely. So let's write it down. Aussie down, leg size is nice, reached 50%, reached 50%. Okay, New Zealand dollar USD. So here we have nice down leg, market retraced into 50%. Around here, if you have been following my videos, when the market faked out and reached the 50% retracement zone here, it would have been a really nice opportunity to sell New Zealand dollar USD. Again, I have risked all my available position on the USD Canada dollar loonie so that I didn't take this trade. Since then, market seems to be returning into original trend. So right now we have the beginning of the down leg. Unfortunately, this leg size is very small, so I would recommend to wait New Zealand dollar USD right now. So let's write it down. So again, if somehow market retraces back again into the 50 to 60% zone here, and then it would be a really good opportunity to sell New Zealand dollar USD. But so right now, don't touch New Zealand dollar USD because the leg size of this down leg is very small, and when you're dealing with the waves that are too small in size, market can easily retrace and make a new local points, so your stop loss can be taken out very easily. So that's why we need the ideal size of the wave. It can't be too big, it can't be too small. So let's write it down. New Zealand dollar USD, leg size is down, leg size is too small. Our decision is to wait. Okay, so what do we see overall? So USD is strong overall. It's doing the fake out on pound USD and euro USD, and it has clearly strong trend on the loonie USD Canada dollar, which we read correctly and entered in a really good zone. And right now I just have to be patient and let the profit accumulate and let the profit hit take profit target. So if I were you, I would closely watch Aussie, and once again, if the Aussie retraces into a good zone, then I would start selling the Aussie. So right now, if you have the position to risk, pound USD looks very good to sell. So here right now we in the pound USD, so market is doing the fake out, downtrend, fake out, around the 50% retracement. So it should soon return into original trend and make a new low. So the thing about this trade is that leg size of this down leg is very big. Because of that, it's unlikely to make a Fibonacci extension. So that's why if you take a trade right now, your risk and reward ratio will be 1-to-1. But success rate is about the 80%. It is still good trade. Alright guys, thank you guys watching and see you next time.